Hi, I'm Malcolm Grenwood, and I'm here at Core Finance to do my regular CEO interview. Unusually today, I've got two CEOs to interview, and they're Stephen Williams and Sachin, joint CEOs from Reabold Resources. Welcome, guys. Nice to see you.
Yeah, nice to see you.
It's good to have you both on the show. So I wonder if, Sachin, maybe you could start off by telling us the overview of Reabold, in brief, what you've got going.
Yeah, so just as a quick reminder of the Reabold strategy, it has been this aim of providing capital to projects that had typically been stranded assets, moving them forward through the application of a modest amount of capital to get them to the point of value recognition. So that sort of underpinned the overall strategy of what we were doing. But behind that was really this kind of importance of recognizing how security of supply was being overlooked for a series of these projects. And so we put together this portfolio with a bias now towards gas, really aimed at ensuring that it would deliver this need for security of supply for Europe in general. So we have progressed a number of assets which we think are very exciting. And in the past, we used to, for instance, have Victory in our portfolio that has subsequently been sold.
Yep.
And we're looking for the remainder of the proceeds to come in from that. But we have two other key projects that have near-term activity associated with them, which is West Newton and Colasanto, which I'm sure we'll talk about in more detail. But behind that is this ongoing ability, we believe, to be able to access those resources, progress them, ultimately monetize them, recycle, redistribute, and so on. And we think we have already begun the process of that virtuous circle of being able to generate significant value for shareholders with that aim of this, implementing the strategy in mind.
Excellent. So, Stephen, you're primarily based in Europe. You mainly have been. What's the reason for that?
Yeah, so Sachin just outlined the strategy that we had from the start.
Yeah.
And that involved looking at relatively stable jurisdictions with relatively mature oil and gas industries, which at the time pointed us mainly sort of towards North America and Europe. I think over time, the Western European gas theme has emerged as the key linchpin of Reabold's strategy. And I think, look, people may be forgetting now because it's a little bit of time since the initial shock of the Russian invasion of Ukraine, but Western Europe is in an absolute natural gas crisis. There is just not enough natural gas to supply demand. And, we're fully on board with the whole idea of the transition away from hydrocarbons. And that is in no way inconsistent with what we're doing at a company like Reabold, because even if you look at their most optimistic forecasts about the speed of a potential transition into renewables, every single molecule of natural gas that we've got in our portfolio will be required to satisfy near-term needs in Western Europe. And we think that Western Europe is fairly unique in that regard, and that we've got obviously relatively stable countries, and we've got a fundamental shortage of natural gas and a reasonable availability of potential supply.
Yeah.
So there are areas where we can find projects with very good geology that have been held up for either because of regulatory reasons, which we think is starting to ease as the governments and regulatory authorities recognize the shortage of supply issue, or they've been held up just due to a lack of capital and industry interest. And that goes back to the original point Sachin made, that really was what Reabold was set up to address, to provide capital to some of these projects that are stuck and move them forwards.
Excellent. Right, I think it would be a good idea to start off with looking at your most recent one, in the sense that LN Energy in Italy, and specifically the Colasanto gas field. Why don't you give us a fairly detailed run through of how you got involved in that and where you are at the moment?
Sure. So if I just describe the field a little bit first, I think
please.
It fits in exactly with what I just said. So we have very favourable geology. Okay, we have essentially zero subsurface risk associated with this field. Multiple wells have been drilled on this field over a number of years, predominantly successful discoveries. Most crucially, the two most recent wells are suspended and are available for future production. So we don't even have to drill again on this field. So not only is there no subsurface risk, the producer wells are already there, and they simply need to be switched on as part of a development project. So extremely favourable, low risk geology. We're in an onshore setting, which is typically helpful for smaller companies, just given the reduced capital required to get these things into production. And we'll see when we talk about our other project. Our two key projects in the portfolio today are both onshore, and both have that characteristic of being very limited capital intensity. So that's what we've got, and it's in an area of significant demand, right? And of course, Italy in particular suffered from the disappearance of the Russian gas on which it was so was so reliant ahead of the invasion of Ukraine. So that's what we've got at Colasanto. Now we have looked at Colasanto in the past. When we first started off the Reabold project about 6 years ago, Colasanto was on our initial shortlist of potential investments, and we didn't pull the trigger in the end. We backed out of it, and we backed out of it because we didn't believe the regulatory regime was sufficiently favourable to get the thing moving and to get the thing.
Yeah, it'd be nice. I mean, because as you know, I've always had a problem historically going back a while, because I've been involved in companies where they've banged their head against the brick wall in Italy time and time again. So I'd love to hear your views on the regulatory situation, because it does appear, as you say there, it's opening up a bit, but your confidence is pretty strong.
Yeah, and Sachin, jump in if I miss anything, because there's a lot of points around this. But it broadly breaks it down into two areas, I'd say, the sort of macro and the project specific.
Yep.
And the macro is all related to the security of supply issue. Okay, so you've got a country that was happily importing Russian gas, happily rejecting applications for domestic production, generally driven by a sort of green transition type agenda, and I guess to some extent, I call it even a panic when the Russian gas supply disappears, and a seeming need to look to reinforce security of supply through domestic production. So there's been a macro change which has shifted everybody's mindset in the country, and I think we're in a position to take advantage of that by picking up this project right now. I mean, there's very few new projects in Italy that could be brought into production in the time frame that we can bring Colasanto into production. Again, it's onshore, it's easier and quicker than an offshore project would be, but it's relatively sizable, it's relatively material as well, even despite the fact that it's an onshore project. So that's the macro side. Then, in addition to that, there's the project-specific part. And the previous project development plan involved drilling multiple new wells and a major pipeline construction. And these were things that the local community was resistant to, right, as we typically see. And again, maybe this is the offsetting problem being onshore sometimes, that you obviously have to make sure you're satisfying local communities with everything that you do. Yeah. So LN Energy, which is the team that got hold of the project and brought us in as an investor and is pushing the project forward, has completely redesigned the development concept in a number of different ways. So it's been scaled down to make it just a smaller scale, less, I guess, scary proposition for the local community to deal with, and doesn't require any more drilling. So that's helpful in itself. It's also been switched into a micro LNG concept. So rather than building a big pipeline over to tie it into the network, this is going to involve liquefying natural gas on the site and trucking it away. And that has a few benefits. Firstly, the removal of the need to get a pipeline permitted, but also the fact that in Italy, LNG is considered a transition fuel. So LNG is used not just as a means of transporting gas, but is actually used as LNG in, for example, road transportation. Right. So major big trucks will be fueled by LNG, and that's seen as LNG replacing diesel, and therefore is a positive step towards the energy transition within Italy. And that means the regulatory environment for this project is being defined as an energy transition project rather than a natural gas project, and that is a huge help in terms of getting the approvals and permits that we need to take it forward. So on that point, Sachin, what I'd like to do is ask you to take us through the process that you've got. You've got an important local situation with the service company, Ital Fluid, and how it's all progressing in that way. Perhaps you could run us through how that's working.
Sure. And this really carries on in what Stephen was describing about relationships with the various regulatory bodies, and in particular with the regional area. It's very important to get local community support as well as the regional government support. And as part of that process, we've had Ital Fluid, which is a service company, as you pointed out, which their offices are is a short distance from where the Colasanto gas field is. And they're a service company that is a significant kind of operator in their own right of various oil and gas fields globally. but have a particular interest in trying to develop the micro LNG project for Italy. And part of what they've been doing is engaging with that local community, with the local regulators, in a way that I think is very hard for an outside company trying to do and achieve in the same way. And part of the reason we believe that progress has been made, and so much progress in a relatively short period of time, has been the ability to pull in that expertise from Italfluid in knowing how to make submissions, how to design the plan, and how to ensure that it meets the needs of all stakeholders when presenting a field development plan of this kind. And so I think you're right, that has been a critical aspect of this and is already bearing fruit in the very short period of time that we've been invested in the Colasanto opportunity.
Which is good. And just to finish up on that one, but more importantly, let's just get some timescales for the investors and the viewers who are watching. First of all, you're nearly there in terms of all the approvals and the permits and everything else. So where are you on that? And secondly, operationally, when you say you don't need to drill any more wells, so how soon will you be getting sellable gas? So
so I think we'll just need to break this down in a little bit of detail in terms of how that development will go for the field. So we're thinking about it in terms of two phases. There's an early production phase, and the early production phase is a gas to power, producing at relatively small amounts of gas versus what the two wells can potentially produce at. Okay? And that gas to power is beneficial from a number of factors. Number one, Italfluid, who we just referenced, do have the type of kit and equipment necessary to be able to do the gas to power generation. And indeed, we also have a distribution tie-in point very close to the field and very close to the site. So this early production phase is something that could start generating revenue in a few months' time. The steps that we have to go through is the formal approval that we've already received verbally from the local or regional government. Once that is formalized, we go through the process of getting the kit and equipment in place, as I described, and then tying it into the distribution network and essentially getting the field up and running. There's some well integrity work that needs to take place as well, but these are all relatively modest pieces of operational work that need to be done in order to achieve.
And the American operator of the field before, who must have drilled these two wells, how long ago were the wells drilled? Roughly?
The Monte
5, 10
Plano
years
wells, it was longer than that.
Oh, right, 20 years.
Yeah, it's longer than that.
But they
just
can go
for clarity,
straight into production.
So some work would need to be done on them. But bear in mind, I think that these wells produced at more than 20 million standard cubic feet a day on test. So we're going to be producing on the full scale level at half that production rate. So when we do the early production phase, it would be even lower than that. And I guess you're asking, can we work out all of the little niggles and gremlins that inevitably creep up in these things? Well, when you are producing, it's so much lower than what the wells are capable of producing. It's, we believe, very low even on the operational side of things to get these.
So have you given the market an idea of revenues shorter and longer term on these two different phases yet, or are you?
So we haven't, and part of what we're doing right now is working through that with Italfluid. If I'm completely honest, the whole regulatory approval process has happened quicker than we had originally anticipated. It's hard in a way to overstate how surprising that may be specifically for Italy, but that is the reality. We have been going through this process and getting regulatory support faster than anticipated. So we're having to run a little bit to keep up with trying to get some of the specific design plans in place. So the next piece that you were kind of referencing is what are we doing? And this is engagement with Italfluid very specifically for the early production phase, but then also what follows on for the full field development. And that breaks down again into two parts. One is the regulatory process. Now, because we've got the early production phase approval in place, the likelihood of not getting full field development is very low. So, I mean, it's de-risked our ability to move into that full field development phase significantly. In addition, just working on site, knowing what needs to be done will allow us again, a de-risk process to take this micro LNG development plan into the operational and fundamentally development and production phase. But also, it's worthwhile saying Italfluid is rolling this technology out elsewhere in the world, for instance, in Morocco.
Yeah.
And we understand that this is well progressed, and all of the kind of aspects of that technology are kind of in our advantage, are kind of being worked through now, which puts us.
I've actually seen it with one of my contacts who I spoke with in the last day or two about this, and they're a few months ahead of it. So it's interesting that they're just getting all the kit on site, and it's an amazing amount of kit, and how a bigger production it's going to be. So we've got all the people converted, and LNG, micro LNG, and Italy is looking very positive. I would like to turn it to West Newton now, and turning to West Newton, which historically has had its own problems certainly over the last couple of years, where initially I know there was some feeling in the marketplace, and I think you tend to agree with that there were some, not necessarily wrong decisions, but some things happened that you weren't expecting to, oil v gas and so on and so forth. Since then, you've had the problem that the environmental agency has taken a long time to look at, accept, and rule that you can do mud-based fluids in the big horizontal well that's necessary. And of course, Rathlin, the operator, has been allegedly and correctly short of money to drill the well. Things have changed there. In all those, you've made announcements, significant announcements in the last 2 or 3 months, which say that at long last, West Newton will go ahead, certainly with the next phase, which is the drilling of the well. Why don't you talk me through it and say, right, where are we? Facts and details from West Newton.
And I think that's very helpful to phrase it like that, Malcolm, because it's worthwhile just recalling what the history's been.
Yeah, please do.
I think when we did the test program, both for the West Newton A2 well and for the West Newton B1 well, that there were issues associated with how those 2 wells were completed, which we didn't have all of the information available at the time. But in honesty, part of doing the test program was to get an understanding of that.
So just to jump in there quickly, and if we go right back to the time when we were drilling the B1 well, we've set out at the time, this will take 2 wells to prove up this field. We will have to drill another vertical well at the B site, which basically proves the existence of the resource, because we've got the A site well and the B site well, and we can therefore pretty definitively say this is how big it is and where it is, and that's all been done, and we're very happy with that. And then we will have to drill a horizontal well to get commercial flow rates. So that was always the intention. Now, when we actually, I'll come on to this in a second, I'm sure, but when we came on to the testing of the vertical wells, that illustrated certain issues. But the whole point of testing those wells was to help us drill the horizontal. The horizontal was always the key well, and that's never not been the case, and remains the case today. So I just thought it's probably worth reminding everybody of that.
Indeed, and that's exactly right. So when we went through the test program for the A2 well and the B1 well, the critical aspect of the months of work that had taken place since that time was the importance of using oil-based muds, because water was clearly damaging the formation. And how can we say that with such a degree of confidence is that Core Lab spent, again, a significant amount of time and analysis taking the cores from those 2 wells under reservoir conditions and seeing how they were responding to various fluids.
This is really important, and I know, having studied and met Core Labs and visited them and so on, they are probably, without doubt, number 1 in their field. So
Correct.
I think it's really important what you're saying here. So.
Yeah, I mean, and again, it's one of those things that it's very hard to overemphasize. And under those conditions, what became clear was that we were able, or Core Lab was able, to maintain significant sustained flow through the cores, i.e. these things will flow under the right conditions. And there, as a proxy for the oil-based muds, they used diesel and were able to demonstrate sustained gas flow through the core.
Right.
Now, that became so important in designing the method for drilling and indeed for completing the horizontal well
Yeah.
and getting what we have projected in the CPR that RPS had completed, which would be the flow rates that you would get from an optimized well of that kind. And they're clearly very significant flow rates that we'd be getting from those. And so all of that work is really what is underpinning the next phase of the operations, which is drilling this horizontal well, using oil-based muds, and using an optimized way of completing the wells.
And all of which you had to have environmental approval for.
So the variation that you mentioned in the part of the question was, why did the Environment Agency take so long? And although it's unusual onshore UK to use oil-based muds, there's nothing really kind of from an industry point of view that is unusual about it. It's just unfortunate that the timelines with the Environment Agency are very long on these variations. We worked through all of the questions they had, and we got the permits for both the A site and the B site. It just took a long period of time to do that. So we're in a good position now, and very pleased that we have these and ready to go for this key well, which is this horizontal well.
Excellent. So talk us through Rathlin and the money side of it, and where you're going to be come next spring.
Yeah, so just as a reminder, Reabold has its direct interest in the West Newton project, which we will be funding, and we are funded for that. So Reabold has sufficient cash today to drill that well, or to drill its share of that well. Rathlin is short for its share. So Rathlin is undertaking a process right now to secure funding to finalise that. I think what's been really important is getting everything else in place so that this is genuinely fully drill ready as they raise finance in whatever form to carry out that drilling. So, for example, getting that permit is key. There's no point presenting something to a potential investor or an industry partner that says, we've worked out how to make this flow, we need to use oil-based mud, and then the question comes back, can you get a permit for oil-based mud? And the theoretical answer was yes, but now there is no question. Now we have a permit for it. So getting everything ready, so you're getting your planning permission in place, getting your environmental permits in place, everything ready to go, means that this is the right time for Rathlin to go and secure that funding.
And it will go because you've got all that, you've got the orders being made for long lead items and that sort of stuff. So
correct,
that's going to go ahead. And I'll come back to the money thing in a second when I've got another quick question on money. But really positive. West Newton is so big, and particularly compared to the market cap of Reabold, because we know how important it is and why it's probably been one of the things that's held the price back because it hasn't happened. Now that it's like to happen, there should be huge upside on that front on its own. So let's just have a quick look at the rest of the portfolio. You've got North Sea acreage, which is sort of on the back burner, I think, at the moment.
Yeah, I think the timelines on those are much longer than the timelines associated with significant milestone and achievements that we can get on the two projects that we talked about. But, we always have to have things in the hopper, and as we pull them through, and as I talked about in the early part of what the Reabold strategy is, once an asset kind of gets monetized or value gets recognized from it, we do need to have a set of opportunities that we can pull through and then start executing on the operational phase for those. But at this point in time, it is true that
ironically they're good prospects, ironically for the North Sea they're quite small, but I'm sure they would be very big. But it's good to know that they're sitting there on the back burner. And Stephen, maybe you can run through just bits and pieces. We've got the USA and we've got Romania, which are sort of going along at the moment according to plan, but fairly quietly.
I mean, they're clearly less core for us now, and we just identified this strategy of bringing together these Western European gas development projects. That's really where we think the real value is going to be. So our oil production in California doesn't really fit into this category anymore. So we executed the transaction a while ago where we merged those assets into a US listed company. It's a small company, it doesn't have much liquidity or anything at the moment, but we're going to help support that company to grow in its own right, and at some point that will facilitate some form of exit, you would think. think, right? I mean, we're not going to commit to that, but you would think we would probably have
That
set this up
makes
to
sense,
provide
yeah.
potential future liquidity
Yeah.
for us. Romania is somewhat similar. It's definitely got some value with it in our view. There's definitely good potential for the asset. But it's not something that we're putting our capital into in any meaningful way at the moment, because again, we just have other priorities with more advanced, bigger scale projects in the rest of the portfolio. So that we think there will be some value to be recognised at some point, but it's not something that's a focus for us at the moment.
Excellent. Quick word on finances, if I may. Everyone's obviously been waiting for the second tranche of the Shell payment from your sale of the Victory asset, and one gets the impression that from your last announcement that you're more and more confident that those proceeds are on their way through. So if you can just tick that box for me, that would be great. And also, although you're already fully funded for West Newton, you did say in that statement that you might be able to help Rattlin a bit with when the money comes through. That if you had a bit of extra, that it might be able to do that.
Yeah. So just the first point, as you say, the importance of the Shell proceeds, which would be in total a little over £9 million net to Reabold. And essentially that's based on Shell taking final investment decision. As a reminder, Shell had really, in our opinion, sort of put this FID clause in for making the contingent payment piece because they were so concerned about the permitting process in the UK. At the time, they'd suffered quite significant blows from the Environment Agency associated with some key projects. It is clear that that landscape is changing, and the Rosebank decision that had taken place for the West of Shetland development is an indicator of that.
Yeah.
Now, Victory, we felt, never suffered from any of the issues that some of those larger projects face because it was gas, it was utilising key infrastructure that already existed and played into the overall security of supply needs because that gas is coming to the UK. But nonetheless, it just goes to show how much more supportive the overall regulatory process is, and therefore is giving us the confidence that you had alluded to, that this cash will be forthcoming, in the relatively near term. And once we have the proceeds in, we will have to start making the decisions that you talked about. Now, clearly, we are funded, as you'd said, for our direct share in West Newton. Because Rathlin is in a process for a funding solution currently, it's really important that we don't muddy the waters associated with that process. So we will.
Well, your big holes are Rathlin anyway, so.
Yeah, of course we are, and we will be keeping a very watchful eye on it. So it's key to importance to us.
I mean, and that's where people think, if it was a rights issue by Rathlin in the old way, they'd be coming to you as Shells and saying, "Would you like to keep your corner in," and that sort of thing. So
yeah,
going to be important decisions to be made.
There will be, but again, we do not want to preempt this process that Steve had described a little earlier. But we will obviously we do have cash resources available, and we will have to look at the portfolio as a whole and determine how that gets allocated alongside the distribution.
So 2 quick questions on the back of that. Firstly, some of that Shell money is earmarked for going back to shareholders. Which is presumably a commitment you're going to keep. Will it be a dividend or a buyback or a special? Or
again, it's something that we will have to consult with shareholders about, and this proposed distribution is a mechanism that we kind of get regular and constant feedback on. I would just say that when we talk about the share buyback program, we are in a situation now where we believe when you look at the share price versus the value of the portfolio, not only the cash that we'll be having, but also the overall value within the inherent portfolio itself.
Well, I mean,
some of the cheapest resources that we can access is through the Reabold shares as we compare that to everything else that we look at.
And to be frank, and I know you're not in, you're in the closed period almost all the time at the moment, but people do ask if you're thinking of putting any more of your own money into the shares at 0.19 or whatever they are at the moment.
And
it's probably, it's a bit cheeky, but
it's a very
people
difficult
ask.
question to answer as you had mentioned.
You've probably got all your
for-
wealth tied up in Reabold already.
We've regularly bought shares in
Yeah.
the market at various points. We've never sold any of us. So maybe
Yeah.
hopefully that just sets a pattern
Good.
of behaviour that
Yeah.
we would at this point certainly be looking to stick to.
Good. Now we're running out of time. We've been here a while. Thank you very much for giving us so much detail. I always ask at the end of the interview where you think you would like to see Reabold within the next 12 to 18 months. I think given that what we've heard today is absolutely strong on the two key areas you're working on at the moment, but perhaps you could give us an idea on where you'd like to see Reabold in 12 to 18 months.
Sure. Well, I think the first key thing is we will have received the full proceeds from the sale of Victory to Shell. So that's the first thing. So we'll be very well funded for all of the other things that we're looking to do. Secondly, in Italy, we should be in production as part of this early production phase that Sachin described earlier, and we should be getting to the point where we're looking at getting approval for the full production plan, for get the full production concession and ready to go into that micro LNG development phase. And then finally at West Newton, we should also be in the development phase at this point, having drilled the horizontal well and proved up the commercial flow rate and moving that one forward into the full development part of the project. So lots going on, two very important projects where we will look to fully prove up the value, and potentially at some point we'll be looking to replicate what we did with Victory, which is to find the most efficient way of monetizing them.
Excellent. So thank you very much indeed, guys. I've been Malcolm Graham Wood, and I've been here at Core Finance doing my CEO interview. Today I've been fortunate enough to be able to interview two CEOs. We've had Stephen Williams and Sachin, who are joint CEOs of Reabold Resources, and today they've been talking us through the projects and how they're going. Thank you very much indeed for joining us, and thank you very much for watching. Bye now.